We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up EUR, CHF. We are on a 12-month time frame. Price action, last candle to right hand side, is a bearish red candle, very small. We do have price action overall, lower lows. Price action overall, higher highs, adding the midpoint, also adding second level lows, third level lows, and fourth level lows. So let's zoom in the price. So current price is sitting at 0.98604. So if price work its way up, it can tag that resistance line at 1.06228. Before tagging that, it can tag that midpoint within that area, which would be at 1.02714. If price drops down, price can head down to the bottom of the second last candle wick, which would be at 0.94293. And before tagging that area, it can tag that following midpoint at near the numbers of 0.96218. So let's take a look at what happened in the market. So we can see that the market did start off at a high, came to a midpoint, finally broke, came back to retest, market pushed down to a low. So when that market came to that midpoint, it created a pattern. So let's see what we have. We have the market broke, came back to retest. So we have that break, first leg, second, third, fourth, retest, one, retest, two. So market's coming from an overall double top, double retest. So if you want to add it all together, quadruple top or triple top and a retest. Market came down to a low, spiked a low once, spiked a low twice, currently pushed down for that third time. If that market is respected at that support, at that low, market's coming up from that double bottom and a retest, overall triple bottom. If market pushes down, then we'll see that structure because we did receive the break of that market. So the market did break second level lows, came back to retest. So that's identifying a pattern for that first, second, third, and market pushed down. So we closing out for that double top. We're just looking for that market to push below these wicks, and that will be breaking the support. If it pushes down further, it'll be creating new lows, and then we're looking for the break, the retest, that market to push down again from that double top and a retest. Or we can just receive that consolidation as we see with the price action into the second last candle, and it can just keep working its way sideways until that pattern is formed for that market to break up, down, or sideways. Working our way down to the 6-month time frame. So in a 6-month time frame, we have same candles, price action, bullish green candle, very small, still active. Second last candle spiked down. So the second last candle is reading that is spiked down to a low, so it could be respected for that spike, and market could follow with the bullish green candle. But so far, market is working its way sideways after that spike down to that low. And we can see at the top much more clear. We can see that double top. So once that market broke, came back to retest, we can see that first, second, third, fourth, as we talked about earlier. Working our way down to a 3-month time frame. Price action, 3-month time frame, reading as a bearish red candle, very small, side by side with the second, third. So we are still in that consolidation with a little bit of movement of consolidation, which will identified as if it's going to push up, price action can be a retest, because it'll be first, second, price action retest, and it follows up with the bullish green candle. We'll see that incline W in that area. Walking down to the monthly time frame. Monthly time frame reading as a bearish red candle, doji, second, third, last candles all consolidating sideways within the fourth, some of the fifth, Well, primarily the first, second, third side by side, hanging out at the top of that fourth area of that candle. So if you had to break down this area, it would be a resistance, we have a mid, and we have a low. So what the market did, spike down to that low with the red candle, first leg, second leg, third leg. So the third last candle came back to retest, price action push, came back to retest again with some momentum to see if it's going to push and break out. If so, market's coming from overall first, second, third, and get that fourth of that double bottom. But right now it's currently reading as a single bottom and look like a double retest, and see if that market pushed out of that area. Overall formation, W. Working our way to the weekly time frame. So price action on the weekly time frame reading as a bearish red candle. Price second, third, fourth, fifth, sixth, seventh, eighth, ninth, maybe some of 10th and 11th candles all within each other. So you're waiting for that breakout towards this area to the top side and bottom side. You want to add a midpoint, you can see how it's happening. So market spike down, retest the top. So overall, if that market does push up, we can see that market's coming from. So this will be just an overall retest area. Why? Because we can see that market identified that first, second, third, fourth. So we have a double bottom. Market came back to retest multiple times on that area. If it push and break out, market's coming from that double bottom and that retest. So we know that we are near midpoints. We're going to add that later on. So market could be dropping down if it does come from these spike ups to that high. So market could be identifying that first, second, third bearish red candle engulfs at least the price second, third last candle. Market coming down, or could be coming down for that double top after it breaks to the next area of support. Daily time frame. So on the daily time frame, we have price action, bullish green candle, very small. Everything on side of that is that consolidation. So we can see that clear consolidation area. We're waiting for that breakout. If it pushes up, it'll be first, second, third, fourth, retest 1, retest 2, retest overall 3. So it's like a head and shoulders pattern or a triple bottom and a multiple retest overall area, and see if that market pushes out from that area. So let's add, we can see that price action is on that midpoint line or near that midpoint line. Let's see what exactly at. It's like below. It's below, price action's above, below the resistance line. So as we walk down the time frame, we're gonna add a zone in that area. And just take a look at what's going on. So we have market spiked that high multiple times. So SR line going above, multiple touches. Let's take a look at where is it currently at with price. So price action is hanging out below the zone. So we can see that if it's respected and finally break out of that zone, below that zone to the top side, it'll identify as overall first, second, third, and we'll see that fourth leg push up for that breakout into that zone retest to push up further. So far we have to see what's going on. So we have a resistance, we have a midpoint where price is near, we have that support. Walking down to the 3-hour time frame, price action still hanging out that midpoint side by side with the second last candle, same as on a 2-hour time frame, still consolidating. But you can see that structure, first, second, price action to retest, see if it pushes up for that incline double bottom. We're waiting for the break of the midpoint. Headed down to the 1-hour time frame, what we have, still have that consolidation. So we're just waiting for that area to engulf to the top side of this to break that market up. And if so, first, second, third, fourth, retest overall, market pushes up. Very important information, guys. Please review and study Forex pattern cheat sheet, breakdown retest strategy. Click on images. Okay, guys, this is Cam Jones, FX Daily Analysis, EUR.Chf.